Welcome back, and joining us for a closer look at what moved markets today is Greg Katzenellenbogen from Sanlam Private Wealth. Thank you so much for your time, Greg. Of course, it seems that there's a lot of cheer, particularly when you look at the currency right now, maybe not so much on the JSE, and of course, quite a lot of things that investors are reacting to at this moment. So let's actually start off with the MPC decision to keep rates unchanged. Was it a surprise that it was unanimous?
No, I think so. Everyone expected that they wouldn't. The Reserve Bank has been quite clear that they want to see inflation down at the midpoint, slightly elevated above that. But it looks like inflation is moving in the right direction, but they are, of course, erring on the side of caution and are not going to. So probably you'll get a cut in interest rates probably mid-year, around there, but they've been pretty hawkish, and he was quite firm on his view that inflation is not yet at a level where they could feel comfortable in lowering interest rates.
Yeah, I mean, Greg, inflation is going down and the rand is quite strong. Would the South African Reserve Bank make a mistake by cutting before the Fed does?
No, I don't think they would make a mistake. But South Africa's focusing on themselves, which is the correct thing to do. But of course, what happens in the US and elsewhere in the world does have an effect. But South Africa is you'll probably see the Fed cut first, and then South Africa follow. Because it's highly likely that you'll get a Fed cut in March. But I'm not sure that you'll get a South African interest rate cut before then.
All right. Well, Greg, as we're talking about the Fed, in the US, the GDP figure for the fourth quarter actually came out, and the economy grew 3.3% in the fourth quarter. That was actually more than what markets anticipated. They're surprising to the upside. Because markets have been moving the can forward in terms of expectations for Fed rate cuts because of how strong the economy still is, and of course inflation not being at the target that it is. Firstly, just talk to me about the strength of the US economy now before we actually get to what the Fed could do in the future.
Well, the US economy is in great shape, and 3.3% GDP print, which illustrates the fact that how strong that economy is, given that everybody has said that they're going into a recession. That doesn't mean that later in the year you might not get some sort of recession, but for the time being, that's not on the cards. And the US and inflation is declining there, so that gives the Fed ample room to cut interest rates. But of course, the other thing is that as inflation has declined, consumers have felt a lot better about spending money, and so you've seen retail sales and things pick up in the US. But the economy remains pretty strong, and it's likely that the Fed will begin this sooner rather than later in cutting interest rates. Interest rates are unlikely to go back to where they were a few years ago at zero, but I think you could possibly find that the 10-year Treasury settles around maybe 3 or 3.25%.
Yeah.
The US.
All right. So you're saying that this doesn't push the can forward in terms of expectations for rate cuts, and it's maybe a sigh of relief that even though the Fed has been hiking, nothing is broken yet.
Yeah, well, that's the thing. So, they've wanted to. Don't forget that you hike interest rates because your economy is doing exceptionally well, and then you want to make sure that it doesn't run away from you and that you cool things down. And as the economy continues to perform, interest rates have been rising. There's always the fear that it's that one interest rate too much and the whole thing falls off a cliff. But the US economy has been extremely resilient. And one can even say that the Fed are probably close to engineering what is called a soft landing, to cool the economy without sending growth off a cliff. So I think that is, it's indicative of the fact that the Fed will cut interest rates. The key question is, by how much will they cut rates this time? And many commentators feel that the expectations are just too high for the amount of interest rate cuts they expect this year. But the Fed has always said they're data dependent, and they will see how the data goes. At the moment, inflation is showing that it's cooling. Obviously, the Fed will take cognizance of these numbers showing that the US economy is still doing well, but I don't think that it will derail their mission to start cutting interest rates.
All right. As we're talking about resilience, Mr. Price, quite resilient even in this environment that is quite tough for consumers. They released a 13-week trading update. They're saying retail sales grew almost 10%, also reporting of market share growth, also selling their stock at higher gross margins. Just talk to me about, the good news that came out of Mr. Price that, of course, lifted the other retailers today.
Well, as you said, just under 10% retail sales growth to about 13 odd billion, but their like-for-like growth was 4.1%, and that is an increase on what has been happening. But the interesting thing is in December alone that their retail sales grew by 15.5%. But I think the key factor here is that in this quarter, they increased their market share by about 1.3%. And that's the important thing, that their market share is going up. And they're going to open something like 140 new stores this year. And I expect Mr. Price, based on these results, to go from strength to strength. Apparel was their strongest point, but their home stores, that is also coming back to growth. So all in all, it was an excellent set of results.
All right. Well, Greg, we have run out of time, so we'll get to your stock pick for today. What will that be?
My stock pick is Anglo-American. Anglo remains one of the most diversified mining houses. It gives you iron ore, it gives you copper, it gives you diamonds, gives you platinum group metals, and it gives you metallurgical coal. Anglo is trading at about a 25% discount to the sum of the parts. But the interesting thing is that one of its big profit generators is coking coal or metallurgical coal. They have these mines in Australia, and it's expected that the price for coal, for this type of coal, will go over $200 a tonne in the near future, and that should generate a lot of extra cash for Anglos, which will offset some of the underperforming divisions like diamonds. But also the fact that the rand has, weakened considerably will also give them some benefit. But Anglo remains pretty. Everyone has written off their platinum group's operations, saying that it's the end of platinum and electric vehicles will change the world, and that there'll be no room for internal combustion engines. Well, you might have seen the statement 2 days ago by the chairman of Toyota, who said that electric vehicles are only likely to ever make up about 30% of sales, and he said most vehicles will be the hybrid models. Well, if that is correct, the hybrid models certainly use platinum and palladium, and that will be very good. So I think at this level, over the next 2 years, you could see at least a 40% increase in the Anglo's price.
All right. Well, thank you so much for your time and your insights on what has been driving the markets today, Greg. That was Greg Katzenellenbogen from Sanlam Private Wealth.